day traders from across the globe, welcome to Short-Term Trading Live with Oscar's 774th YouTube video, baby. Yeah. My name is Oscar Carboni, and I am straight out of the pits in New York City on Wall Street, and I am here to teach you the tips, tricks, and techniques that I have learned in my 30 years or 29 plus years in this business. Traders, this video is being filmed on Wednesday night for Trading Thursday. That would be September 15, 2011. I am still up in New York. We're still dealing with the aftermath of Irene. I'm proud to say, and I'm happy to say, the office is back together, looking great. And the house has now been cleaned out, and the smell is gone, and the water's receded, and everything's been dried up. So I'm almost out of here. I'm going to be home back in Vegas shortly. I can't wait. Anyway, so we're here. While I've been here, we've been doing lots of omnis together, and the omnis have been kicking butt, so let's stay with it. Traders, as we know, futures trading is extremely risky and can cause substantial financial loss if you do not understand this game, if you do not have risk capital to lose, if you do not place stops first, you shouldn't be trading futures. But for you traders out there that understand the risks behind this game, rock and roll, another green omni for trading on Thursday. You gotta love these green omnis. Now, we're expecting a pullback, and we're going to buy into that pullback, and that's what we're looking at for trading on Thursday. Now, traders, if you pull up a 200 bar moving average and overlay it on a weekly bar chart of the S&P, you will recognize that the S&P is holding above the 200 bar moving average on a weekly, and believe it or not, on a weekly chart, it's extremely important. The fund managers all around the world watch these weekly charts with the 200 bar moving averages. They get out of the market or short when you're below the average. They get long the market and expect higher when you're above the average. And for the weekly charts, in the NASDAQ, the transportation average, the industrial average, the Russell, we're maintaining levels above the 200 bar moving average. Now, it's been pierced a couple of times in the last 2 weeks, but we're above it, and we're staying above it, and that keeps us bullish. Green omni for Thursday. Traders, this video is going to be quick because I am here in New York and I am working on other things, but we are watching markets right now. We are buying dips in the S&P, NASDAQ, and Russell. If you'd like, come on down to my site, livewithoscar.com, jump into my free trading rooms, and allow me to show you where those trades will take place and exactly how we came up with those ideas technically. All right, traders, give me a calling time there tonight, 702-629-4755. Watch the upside for Thursday. We're buying a big dip and then expecting a rally. We'll see what happens. Of course, our stops will be in. If, in fact, the market starts to turn bearish tomorrow and our stop gets hit, that's what stops are for, and then we'll think about the downside. But for now, we start off bullish, we buy a dip, and we see where it goes. All right, traders, I will see you for tomorrow night's video. Remember, always keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Yeah. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.